Now I'm very honored to introduce our speakers today, Folake Okusanya and Tarek Selmi, both banking advisors with RBC Meeting Place. Please join me to welcome them.
Thank you very much, Elena. It's always a pleasure to be back on another webinar with RBC team. And before we go into our presentation, we always like to tell you who we are and what we do. My team is called the RBC Newcomers Meeting Place team. Basically, what we do is to support newcomers to Canada. A recent research statistics was done in the year 2016, and it was discovered that 1 out of 5 Canadians are born outside of Canada. That tells us a lot of things. That is like 20% of the population. That is why this segment called the Newcomers to Canada is very important to RBC. And the bank actually puts in a lot of effort to ensure that these people who have left everything to come to Canada are well settled. And that's why we came up with the idea of the Newcomers Meeting Place. It's not just a regular bank. I know that when you walk into a bank, what you're seeing are tellers, account opening, and all of that. But here in our meeting place, it's just a warm, welcoming place where newcomers can feel at home. You can come to us with your questions, your concerns. We can answer questions around banking and beyond banking. And the best of all, you don't have to be an RBC client to benefit from our services. So everybody is welcome. Now let's talk about what our team does in the community. The first team was set up in Brampton, Ontario. And what we do basically is providing advice that newcomers to Canada can use to help them integrate faster and settle down better. You know, a lot of newcomers have missed out on many resources simply because they are not aware. So our team takes pride in connecting with newcomers, ensuring that all the resources they need to settle appropriately is received. So that's our team in Brampton in the community, reaching out to newcomers. On the screen is our team in Markham. Both of them are in Ontario. So if you have family, friends, colleagues, people that relate with you that live in this province, there are 2 units in that province serving newcomers to Canada. And of course, the third team that was brought up was our team. And on the call today, I have my colleague, Tarek. So 2 of us will be. Okay, so myself and Tarek will be facilitating today. We're actually a team of 3. But unfortunately, Alexandria, our unit head, could not join in today. But she's actually on board with this. Okay, so we have a team of 3 whose role is to help you settle faster, helping you understand financial literacy and areas that are not so clear. And that is one of the reasons why we're on today's session. And we have another team that is based in British Columbia. That is the 4th unit that was set up for the same purpose. And so if you have family in British Columbia, we have 1 there already. And the youngest team is our team in Calgary. It's a brand new team. Things are still being put in place. So if you have family in Calgary, let them know that there is a newcomer unit of RBC ready to serve them as well. Okay, so let's go into why we are here today. We want to talk about this very important topic, getting and building good credit. You know, coming from a place where I am originally Nigerian, so I'll tell you my story. So coming from a place where everything you do relies on your own savings. You're required to save your money to buy a home. You're required to save your money to buy a car. You should have your cash to do everything. And then suddenly we come to Canada and everybody's talking about credit card, borrowing to buy a home, and all of those things. You trust me, there will be a need to adjust, to learn a new way of doing things. And I know that many newcomers to Canada are probably in the same situation where they need to understand how credit works. Because some people, out of ignorance, have spoiled their credit and are trying to recover from that. We don't want our newcomers getting to that point. So information is key, and that is why we are here today. We'll be talking about defining credit itself, what is credit. We'll talk about how to get credit and the habits that will help you build and maintain good credit. So the very first thing. So it's important for us to understand what is credit. Simply put, it is the ability of a customer to obtain a good or service before payment. So you're enjoying the service and you're paying back gradually. You are able to get it in advance. That is what it is really. It's taking a good or enjoying a good service and paying afterwards or over an agreed payment plan and over a defined period. So simply put, that is what it is, borrowing to meet your goals. That is what credit is, okay? Now, I'm sure you'll be concerned about, okay, what is the difference between credit and debit? Yes, credit is borrowing to pay for goods and services, while debit is purchasing with money you actually have, your own money. So I'm sure many newcomers will get a card when they open their account. That card is your debit card and is used to access funds in your savings or checking account. The other card you will most likely qualify to get is a credit card, which is using borrowed money to purchase items with the goal of building a credit history. So basically, that's the difference between the credit and debit. Okay, so let's keep going. We need to understand now, what are the players when it comes to credit or borrowing? Many people know that, yes, you're borrowing money to reach a goal, but we need to understand that there are different people involved, or there are different important terms involved in the credit process. Okay, the first thing you need to know is the borrower. This is the person who is giving out money or lending out money, or rather, the person who is needing money to be able to meet a personal goal. So the goal could be to buy a home, to pay for education, to meet an emergency. So the borrower is the person who is needing money to reach a goal. Now, the lender is the person who is providing the money, right? The person giving out the money to the one who needs to meet a goal is the lender. Another important term to know is the principal. The principal is how much is required by the borrower, how much the lender is giving out to the borrower. That is the principal amount. And as we know, money comes at a cost if you're borrowing it. So the cost of lending out money to a borrower is called the interest. That is what the lender has in it for him if it's giving out that money. So the interest is what is charged to the borrower for using the money of the lender, simply put. All right, so let's talk about why credit is important. Remember I said that coming from Nigeria, where I have to save for everything I need. And then I get to Canada and I'm being told credit, credit, credit. It's important to note that a number of goods and services in Canada relies on a good credit history or a good credit score. To qualify for a loan, you might be requiring a credit history. This may help you to secure lower interest rates. Some insurance companies require a credit check to know whether you have to pay them upfront for a full year, or they can put you on a monthly plan for your insurance. Some landlords or renters are not happy to give out their homes to people without a credit history, and they may be demanding some huge down payment for you to rent their homes. So bottom line, credit plays a very important role in the lives of people who live in Canada, and it's important to understand how it works and how you can maintain a good one. At this point, I'll hand it over to Tarek, my colleague, to talk about the types of credit products that you may have here in Canada. Over to you, Tarek. Tarek, can you mute yourself? Because I see that you're muted.
Okay.
Okay, so, I hear you now.
Okay, sorry about that. I was muted. So, okay, thank you very much, Folake. And you are talking about the importance of credit in our lives. And also, I want to mention some jobs. You can access them when you have a good credit. And I will talk about even banking. So before even we join the bank, they will check our credit history to see if we are going to give the good advice to people. So we should have a good credit. If not, always it will say, okay, let's try again, or you need to get a better credit. So thank you, Folake, for that. Then I will just go to the next topic. And the next topic is about the different types of credit. So when you came to Canada, actually, you saw there is what we call overdraft protection. You saw line of credits, credit cards, loans, mortgages. All those are types of credit, but every kind of credit is used for something. So you cannot, for example, use your credit card to buy a car because the interest is high. And for example, and you need to pay, it will cost you too much to have that credit. So for today, like we'll discuss maybe three kinds of credit. The most known, like the credit cards, personal loans, and the line of credits. And those are the most important. Why? Because that's the most popular. That's what we get first. When you arrive to Canada, we get a credit card. And that's what you will be using in the future. So I will just talk, and maybe I will be talking more about credit cards because that's the first thing that you get, and that's usually the people where they get hacked with the credit cards, so they can ruin their credit easily. So for credit cards, usually it's used for smaller purchases. As I said, you are not going to use your credit card to buy a car because that costs you too much. And the interest rate, it's 19.99%. Also, for example, for a credit card, when you are, for example, paying something online, you will not use a loan. You will use your credit card to buy that thing online. Or also, you give it sometimes as a security. If you are renting a car, they will ask you, okay, I need your credit card. So as it's like a deposit, you are putting that. When you give back the car, then you can get your credit card and they don't charge you anything on it. So credit cards are the first thing and are the most important things to be used here in Canada because you can use it in many times. However, Folake might ask me and tell me, Tarek, I have enough money in my checking account. Why I will need to use my credit card? I don't need the credit card. I have enough money. I can pay everything with my debit card instead of using the credit card. So there is some benefits that comes with the credit card. And usually those benefits, you cannot find them with a checking account or with a saving account. One of those benefits, for example, cash back. You use your card, your credit card, and you get cash back. Sometimes also you have rewards points. So when you use your card with rewards points, that rewards points, when you collect them, you can switch them to a gift a gift card. You can also switch them to money, so you can get that money to pay back your credit. You can switch them even to vouchers. So you receive that voucher and you deposit them into your tax-free saving account, RRSPs, or any other kind of accounts. Okay. There is the travel insurance. When you travel outside of Canada, the checking account, it doesn't give you that insurance. So if you are sick outside and you have travel insurance on your credit card, you can use it. So you get sick, you go to the dentist or you go to emergency. When you come back to Canada, you call your credit card and you say, okay, I used my credit card to buy this airplane ticket or to book this vacation, and I spent some money there. So they will pay you back all those expenses for emergency. Extended warranty, that's also something. Yeah, it's all, I think almost 99% of the credit cards, they have the extended warranty. So when you go, for example, you buy an iPhone. The first year, if this iPhone is broken, I will take it back to the shop. They will repair it for me. But for the second year, there is no warranty. So that's when I use my credit card warranty or the extended warranty. So either they will repair it, or also instead of repairing it, they can also buy me a new one if it is stolen. So it's stolen from my card. I report that on my credit card and they will pay me back. And there is low to no annual fees. Always, when you are new in Canada, start with no annual fees. You don't need to pay fees just to start building your credit. Okay. The next slide here. So this is, it's about when you receive your statements. We know all, when we receive our statement, the first thing that we need to do is to verify all these transactions. You see all those transactions? Because what happened, sometimes if someone stole your information, they can use it for other things that you are not interested in. So they can use that credit card to buy things. So you can see, for example, okay, this transaction on July 10th, I never did that transaction. So it's the time to call your bank and tell them, okay, there is a fraud, or I don't remember this transaction. And it's okay. Sometimes if you don't remember, it's their job, the job of the bank. They will do their investigation and try to get you the money back if it is a fraud, or give you the information about that transaction. Usually when you receive a statement for your checking account and saving account and your credit card, they give you 90 days, 3 months to report any fraudulent transaction. After the 90 days, it's hard for them just to go do that investigation back on that item. Okay, so just remember that you have 90 days to report any unknown transaction. The other important information here on this, it's the minimum payment, which is here. Also, there is the new balance and the payment due date. Why this is an important information? So for us, if you pay the full balance, the new balance here, before the due date, there is no interest that will be charged on your credit card. So for people who doesn't want to pay interest and they are using just the card to build their credit, you need to pay the full balance before the due date, and there is no interest charged. Also, there is, if you use, let's say, and it happened to all of us, like some months we don't have enough money, so I just want to pay a little bit to the credit card, and I will pay it later on. So if I do that, then at least I need to pay the minimum payment. Usually the minimum payment is the interest plus $10. This is on credit card. Interest and fees plus $10. That's the minimum payment. So what does it mean? If I pay the minimum payment before the due date or on the due date, that means on the credit bureau, which we'll be talking about it later, everything will say he paid as agreed. So that's what you need to pay. However, the bank, if you pay only the minimum payment, they will start charging you interest on the balance. Okay. The loans. So as we said, okay, if I need to buy a car, I will not use my credit card. Why? the interest rate is high, and sometimes I don't have enough limit on the credit card. So if I'm buying a car for 30,000 or 40,000, yeah, I will not use the credit card. Instead, I will use a personal loan. Not only car, you can get a personal loan for a card or for a car, or even for furniture, for other things. So if I use this, first of all, I will have a lower interest rate. Here it says moderate interest rate, but it's 100%, it's lower than what you will get on the credit card. Second thing, it will be a longer term. So it will be 5 years. I know some dealerships, they give more than 5 years. So if you buy a car, they will give you 8 years to pay that loan. And also the payment, instead of paying only monthly, you can pay monthly, bi-weekly, bi-monthly. Sometimes even you can pay weekly. It depends, and usually you tie that to your income. So when I receive payroll, actually that's the time to pay out one of the loans or to pay out my my credit card. That's when you can do it. So there is many things. So the difference, if you see here with the credit card, you use it and you pay it. Use and pay. That's what we call revolving credit. For the personal loans, once you use it, you use all the personal loan, for example, and you pay it in 5 years, done. You cannot use it again. So that's what we call installment credit. So we have two things, installment and revolving credit. Okay, on the next slide. So this is the line of credit. The line of credit is usually if you are going to, you are a student or you want to use that loan. So for example, I don't need, for example, I have a limit of 30,000 on my line of credit. It's flexible, so I don't need to use all the amount and start paying that. I use only what I need. I need the $2,000. I take that 2,000, use it and pay it. And the interest will be only calculated on the amount that I used on that $2,000, for example. The payments are monthly, and the payments here are flexible. So you can pay only the interest. Every time I use that, if I need to pay, I can pay only the interest. Then the rest I can, for example, add an extra. If I have extra cash, I will put more. And you will see the difference here between the line of credit and the loan is that the line of credit is revolving. That means you can pay it and use it again after 1 year, or you can use it again the next week. So every time it's there for you. A lot of people, they use it as emergency. So they have it, they don't need to use it, but they keep it there in case if there is, for example, something that I need to pay and it's urgent, I will go to my line of credit, take that amount, put it in my checking and use it. Okay, so the difference between this and the loan is that it's revolving. We can use it every time. The loan, when it's paid, it's paid. You cannot use it. If you need another amount, you just need to come in, do an application, and have the paperwork again to get that. Okay. Actually, mortgages, we'll not be talking about mortgages today. It's more complicated, and it needs at least 1 hour just to explain mortgages, what you need for mortgages and everything. But for mortgages, just keep one thing in mind. To get a mortgage, you need to save the 5%, at least 5%, a down payment. Okay, so the next slide here, it speaks about good debt and bad debt. So if you get, for example, money to go to education, to go to school, that's a good debt because that's investment in yourself. After the education, after going to school, you will get better job, you will get more pay. So it's considered like, it's like you are buying also a business. You can borrow money to buy a business, and that's also is considered as a good debt because you are investing. You are putting the money in for a greater opportunity to earn more monthly, or a mortgage also, like you are buying your home. So that's something important in your life, and it's a good debt. What we consider as a bad debt, it's when you are spending money. For example, you get cash advances from a credit card. If you get a cash advance from a credit card, first of all, that it will cost you a lot of interest. It's 23.99%, which is too much to borrow money, and it will take you forever to pay that amount. Also, like the cash advance, they don't wait until the due date to start counting interest. They start right away. The day you take from your credit card the cash advance, it's the day that you are going to get charged interest. Okay, consumer debts. Consumer debts, let's say Folake, for example, travels to Nigeria and she didn't save for that trip. She would be starting to use her credit card there and there. Then she accumulates some debts on the credit card. And after that, it's hard to pay back, especially with 19.99% of interest. Okay, so usually when you get a debt, it's for a reason, and hopefully that reason always be something that you can get a better life. You can get what's your goals. For example, if you are planning to get a home or you are planning for education, that's a good goal. Okay. Okay, so here we are going to talk about, so we know now the different products. Now we are just going to talk about when you go to a bank, what they do see on your application. The banks, they have what we call the 5 C's. And if you compare the 5 C's, you will see it's the same thing. If someone is coming to you personally and asking for money, you will do the same thing. You will ask, okay, do I know this person very well? Is he responsible or is she responsible? Did I, for example, know that this person managed their money very good? So all those things, the bank will do the same thing. They will see if you are been a long time or long enough in your job. So that's something that you can base a credit application on. So, okay. And we see, okay, this person also is good in managing their finances. How we know that? We see the capital, which is number 2. The capital here, that's, we want to know if that person, like he's coming to apply for credit, if he has enough savings, if he has enough money for the future, in case like times like this, like COVID. If there is COVID, for example, that person will be laid off, for example, or he will have less hours to work. Then at that time, the bank wants to know that you have enough savings to continue paying your credit. So that's a second point, but it's important for us, for the banks, and even for you. Like if you are giving money to someone else, like lending some money, you want to know that person, in case of emergency, they can get that money back and give it back to you. Okay. The third thing, which is the capacity. The capacity when you go to apply for a credit card, or apply for a loan, or apply for a mortgage, the first things they will ask, okay, are you working right now? Where are you working? For how long? How much your income is? They want to know how much your income is, just to be sure that you are able or capable to pay that loan back. So the banks, they are not in the business. For example, if you're earning $1,000 a month, they will not lend you something that you will be paying $1,500 a month. Doesn't make sense. Where are you getting the extra money? And also, you still have other obligation, like you need to buy food, you need to pay taxes, you need to pay your bills. There is other things other than the loans. So that's why the capacity is not always considered at 100%. We usually see only 40% of what you're earning. So if your income is $1,000 a month, the bank will try to get only $400 payment every month toward your lending. More than that, they are putting you in trouble. Okay, and the fourth C, which is the collateral. So the collateral is when you are, for example, buying a car. The car is the collateral, or is the guarantee, in other words. And what does that mean? So that means that you are getting a loan, but the car is linked to that loan. So in case if there is trouble or you cannot pay that, the dealership will come back and take that car. So it's a guarantee. The guarantee, it has two things. First of all, when you have a loan and there is a guarantee or there is a security on that loan, the interest rate will be lower. So they can afford to give you lower interest rates. If you go to a dealership, they will always give you a lower interest rate because they have a guarantee. Okay. Even for a home, if you are buying a home and you are getting a mortgage, you see the interest rates, 2%, 3%, depending on the terms that you are using for the mortgage. But the interest rate, it's low because there is a guarantee or a security on that mortgage, which is the home itself. Okay. And the fifth point, it's the credit history. And that's why we're doing all this. It's just to talk about credit history and how you can maintain credit history. But let's say if someone comes to you and he's asking for a loan and asks you, okay, I want $100, but you know that person never paid back. Will you give him your money? The same thing the bank will do. So they will, but they will not know everybody. There is a credit history. There is a bureaus, which we'll talk a little bit about them later on. So they can see, okay, did you have, what's your relationship? What's your reputation before with other banks or with other lenders? And they see, okay, if they can see that you are paying on time, you never miss the payment, there is not a lot of debts on you, so they are comfortable to give you that loan. Let's say if they see that you missed many payments or you owe a lot of money to someone else and you never paid, so that time they will see, okay, can we trust this person? Okay, I hope you can see like this 5 C's, the same thing. It's like the banking when they are lending money. It's the same thing that you will be doing if you will be lending money to someone else or to a friend or something. Okay, so we talked about the credit bureaus. There is 2 credit bureaus in Canada. We have Equifax and TransUnion. So all the banks, all the credit unions, they report to these 2 bureaus. They will send the information. So every month, for example, they will say, okay, Folake did pay on time. They will send it here. Or they will send also the balance. They will say, okay, Folake owes, for example, $2,000 on her credit card. All the information, they are managed by those 2 credit bureaus. So they record all this. The banks, what they do when they do that, when they want to know about you, about your credit history, when they do the application, they need to go to one of those 2, the Equifax or the TransUnion. And by the way, a lot of banks, I know like Scotiabank, RBC, BMO, when you go online on the online banking, you can see your credit bureau. So there is a link there to see your score and to give you like the last transaction or the last, balances that you have on your credit cards. Okay, this is one example here. So this is when you go to your online banking. So it gives you the credit score, as you see here. And the credit score is, if you see here, it's divided. So there is what we say, very good, excellent credit score, which is the green one here on the picture. And there is a bad credit score, which is between 300 and 692. But it depends. So TransUnion, I'm pretty sure they are a little bit different than Equifax in having those ranges of credit score. You can do also when you are online, you can do with a score simulator. So let's say you go to the score simulator and you add, for example, I add a loan, and you will see how much that will affect your score in the future. Or you say, okay, I'm going to do a new application, or I'm adding a new credit card, anything, and you put that simulation and you will see what can happen to your credit score if you do this application, or you get a new loan or a new credit card. Okay. I'm not sure, Folake, am I good on the time or just to be faster?
We're actually 1 minute to time. So
okay, so I will be, So for the credit score, here, this is the most important thing. it's the payment history, which you see here. It's a big portion. And there is also the credit utilization, which is also a big portion. Payment history, that means if you are paying every time on time. So as you saw on the credit report, it will say if you are paying on time. So that's the most important thing. After that, it's a credit utilization. And when I say credit utilization, it's how much balance you have on your credit card, for example. If you are using too much the credit card, then it will show. And on the credit cards, for example, it's better always to use 35% to 50%. Because if you are using or you are maximizing that credit card and you keep it forever, like not forever, like you keep it for 2 or 3 months, that shows that you are using too much your credit, and it shows that you are depending on the credit, which is something that the bankers or the financial institution, they don't want to see that. They don't want to see that you are depending a lot on the credit. If you do a lot of new applications, also that will affect your credit. Just try to limit yourself to 3, maximum 4 applications a year, so you can have your credit score stable. Also, account history. So, for example, Folake she's been here for 10 years, so she has more history than someone who's been here for 1 year. So, if you don't have a credit card or you are hesitating to have a credit, it's time to get a credit, just to start building your credit history. Even if you don't need it, but it's good to have that credit history start to build. And also too many accounts. Too many accounts, it's hard to manage. And usually it shows that you are a credit seeker. That means if I have a lot of credit, why I need 14 credit cards, for example. But it shows that you are a credit seeker, so it makes some question marks like in your credit file, okay? And the last thing here, just I will summarize. So to get a good credit or to build a good credit, pay your bills on time, reduce your debts, correct any errors on your report. So when you see your report and there is a mistake, that's the time to call the credit bureau, TransUnion or Equifax, and correct that. Also, you can use your credit card, or you must use your credit card responsibly. Don't get a lot of cash advances on it because that costs too much, and start early and be patient. Okay, thank you very much. We'll go back to Lorena to see if there is any questions. And by the way, this is our email address. So I will send it to Lorena later on.
Elena,
So
Elena, no worries. Yeah.
Elena.
Okay. Elena, sorry. Yeah, and yeah, she can share this with you.
Thank you, Tarek. Thank you, Folake. You're amazing. We learned a lot. So this afternoon, I'm sending to all the participants your names and emails and also the recording. So now we have 15 minutes to go over the questions. Maybe Sarah can help me with some of the questions. You can guys now raise your hand. Sarah, any questions?
Yes, we do have 2 questions, Elena, and the first one is from Temi Tope. Is there any advantage to credit cards with annual fees?
Yes. Okay. So we prefer that you get a credit card with no annual fees. But if the credit card comes with annual fees, that means there is either insurance added on it or there is any other benefits that can be added. And when I say insurance, I'm talking about travel insurance. Or sometimes you are renting a car and you don't want to pay that insurance, like car insurance on that rent. So you can use your credit card to pay for it. If there is any claims on that car, then your credit card would be paying. But yes, banks will not charge you annual fees if there is nothing for you in it. If they
So
charge
really
annual fees,
it depends on what your needs are. So determining first of all, so for example, if you fly a lot and travel a lot, maybe due to work, you'll find more value in having an Avion card, for example, that gives you rewards for flying. So really, it depends on your needs. And for many newcomers to Canada who are probably brand new, your immediate needs is not a vacation. So you're not really looking at all of that yet. You're still learning to build your credit history. So you want to keep all your costs at a minimum. Maybe when you start earning an income, you can afford it. And so you can begin to look at other options. But for a start, to at least get you going, a basic credit card is all you need.
Thank you for those detailed answers. We do have another question from Sweta. This question was raised when Tarek was discussing about the credit bureau. So does both agency have agency rate at the same level of credit, or both could show a different credit score?
So usually both agencies, they have the same credit information. They have the same credit information, and it's the same credit score. Usually it shows between both of them. Sometimes it's different. And why it's different? For example, some companies, they don't report to Equifax. They report only to TransUnion. I mean the credit unions. So they don't report to Equifax. You will see all the information in TransUnion. Yeah. And what I advise always, it's every year, you can get a free credit report from Equifax and from TransUnion. So if you get that free credit report, it's just to match both to see if they are the same, and to see also if there is any fraud or someone is using your identity to get credit. So that's a good thing. But usually it's the same credit, and it's the same basis that they use to get the credit score.
Thank you, Tarek.
Yes,
and Tarek, I have one additional question in addition to that. It's like when somebody does a credit check on you, like for example, when you start working in RBC, or even when you rent, like newcomers, they do that check. Do they report the number, the score number, or just say it's a good history or bad history?
Yeah, it says it's a good history or a bad history. For example, if you are going to rent, he doesn't need your score number. It means nothing for him. If he sees 700 or 800, it doesn't tell him anything. It's just say good or bad, or it says issues. For example, it says credit bureau says there is a collection. And always, if it reports a collection, that makes more questions. But for example, you asked me about when you do an application, if you are asking about your credit, someone else is asking about your credit, there is two kinds. So there is the soft credit check, which doesn't affect your credit. Like when you go to rent a house, it's a soft credit check. It doesn't hurt your credit. If you go to a job and the job, they say, okay, we need to see your credit, that's also a soft credit. Yeah, and even the other lenders, they cannot see it. So, for example, if you come to RBC, I cannot see that your rent guy or another job, they saw your credit. It's only you who can see it if you ask for that credit report every year. So that's soft. The hard credit check is when you are applying. So I want a credit card, I apply, that's a hard credit check, and I am looking to your credit. So the bank is looking to your credit. So it's a hard credit check, and that's what affects your credit. If you do too many of them, that will affect negatively your credit score. The last thing, because I see someone asking the question. So if you are, sorry, if you are looking to your credit, so you go to online banking and see your credit yourself, doesn't hurt your credit. Even if you see it 100 times a day, it doesn't hurt your credit, because it's you who is asking for your credit, and it's your right to see that information. It's your information, actually.
Mm-hmm.
Okay. I'm not sure if Folake wants to add anything.
No, I'm good. I'm good. Well answered.
Yeah, Folake.
Yeah. Let's take the next one. The one about a new immigrant without a job.
Yeah.
Let's talk about that.
That's the best question ever. That's one question I wanted to ask, because that's really the question everybody asks. As a new immigrant without job and credit history, what happens? So Folake, you want to talk about that?
Right, I'll take that. So a new immigrant to Canada, within the first 12 months of arriving in Canada, you can qualify for a credit card without a credit history and without employment. Now, if you've been in Canada for more than 12 months and you don't have a job yet, if you are studying, you can still get a credit card without an income and without credit history if you qualify as a student. If you're not falling into either of these categories, you have to wait until you have employment. And that is why we try our best to make sure that all newcomers to Canada get a credit card as soon as they arrive, so that they don't miss out in that first 12-month window. So if you're within that first 12-month window, you can still get a card without an income and without credit history. If you're struggling with that, feel free to reach out and let us talk about it. It might be based on your own peculiar case, and we can see what we can do about it, okay? But generally speaking, if you're still within the 12 months window, you should be able to get one without a history or without an employment.
And you will ask some kind of security, like investments or something?
No, it's an unsecured credit card. You don't need to have an investment. You're not asked to bring money to get it. No, it is an unsecured credit card. It's a defined limit based on the fact that you're new to Canada. We'll look at the program under which you came to Canada and determine the appropriate limit to provide. That is how much risk the bank is willing to take to support newcomers to Canada.
So that's great. We clarified a few very important things. First is like credit is good. You need credit history, and connect with Folake and Tarek to get your first credit card if you don't have any. Sarah, next question.
Do have a question from Abdullahi. I have noticed that Credit Karma and Borrowwell show different credit scores. Why is that so?
That's a good question. But in all honesty, those institutions are not yet seen as the go-to bureau when it comes to your credits. The banks do not run by those credit bureau for now. I know they're relatively new compared to TransUnion and Equifax, and those are the ones that we are required to work with. So I wouldn't be able to say much about them. Tarek, do you want to say something?
Yeah, I know, like Credit Karma, they use TransUnion. Borrowwell, I don't know what they use exactly, but of course you will see some difference. Why? Because, for example, Credit Karma gets the information on the 1st of the month, which will be different than Borrowwell, that they will get the information on the 5th of the month. So between that dates, some things like balances change, like even the balance on your credit cards will change, payment history, it will change. So there is a difference because of the date. But I usually, instead of going to Credit Karma, for example, or Borrowwell, which they are good, it's go to the source. So Credit Karma, they get the information from TransUnion. So if you get your information from TransUnion, that's exactly like there will be no changes or no changes of dates or anything on that one. So, you know, every time, for example, I know like on, I have, for example, an account with BMO, I can see my credit score on BMO and I compare it to RBC, I will see both of them different. And what I saw, it's BMO, they get the score on the 15th of the month. However, RBC, they get it on the 5th day of the month. So there will be a difference for sure. But instead of that, I will go directly to TransUnion and I see my score. And as I said, it's free. You can ask for a free report every year. I have complimentary questions because it's about for the people who are applying for a credit card and they are new to Canada. So if you are new and you are just 1 month here, of course, you have the right to apply for a credit card. I cannot talk about the other banks, but I know for RBC, for example, you don't need to have an income and you don't need to have a credit history to have a credit card, as long as you are a permanent resident here, or even other programs, but the limit will be a little bit different.
So
Okay.
Nina, thank you for your excellent question. And you're gonna be our success story now when you connect with Folake and Tarek and you're gonna get your credit, your first credit here in Canada. So that's a good achievement today.
Yeah,
Right.
always the credit are, for example, it's different from one to another. So it's better if you have questions or you want to discuss it one-on-one, you are always welcome. Like you will have our email addresses and I will send even the phone numbers for Elena, sorry, to get the yeah, to get the exact, to get an answer for your questions. Maybe if you don't want to discuss that in a group, that's okay. I understand that.
Yeah, privacy.
So the contact information, guys, gonna come with my follow-up email this afternoon, in which email I gonna provide the names and the emails of our guests today, as well as the recording, as well as information about Eric, Edmonton Region Immigrant Employment Council, because few of you may not be our mentees, may not think about us. So I'll provide our website information and where you apply. And what else? Also, we'll provide information about how to subscribe on our YouTube channel, because there we have all the previous recordings. We had already 4 presentations from RBC on different topics. And you also subscribe to our newsletter, because there you're gonna see upcoming events. Don't want to miss that one, because we have 3 more with RBC until September, a very interesting topics coming up, plus a big one, Smart Connection event on May 20th. So you receive all this information, don't worry about that. Sarah, anything?
We have it all covered, Elena. Everyone is grateful for the information that they receive from RBC. So thank you, Tarek and Folake.
Always a pleasure.
And we have our Doug Piquet, our executive director, who may want to say a few words.
Hi, Doug.
Hello. Hi,
Good
Tarek.
to see you.
Thank you guys so much. It's funny. My wife works at United Way, and she works with the Power U program, and we were just while you guys were talking, she was listening in on some of the content that you guys provided. You know, financial literacy is such an important component to newcomers coming to Canada, and my wife is originally from Peru, and so she had some education, a learning curve as well when she came to Canada to learn some of the nuances of the financial systems here in Canada. So I was really just a big smile on my face as I was listening to you both. I think this information to all of the people that are listening today, this is such key information in helping you to settle here in Canada and requite your dreams here in Canada. And I want to thank Elena and the Eric team for, putting this all together. I'm just so pleased to see all of these names and faces that are attending today. And I really love the concept that RBC has in terms of making, this kind of information accessible. Because so many people do not have this information and they miss out on such great benefits. And so thank you so much for the presentation this morning. And thanks again, Elena and your team for putting this all together. We really enjoyed the session.
Thank you, Doug.
Thank you,
Thank you.
everybody.
Thank you, guys.
Have
Thank
a
you for the
lovely day.
invitation.
Thank you all for attending, and we'll keep in touch. And email me any questions we were not able to answer. Thank you, RBC. Thank you.
You're
Thanks.
welcome.
Bye.
Okay, bye.
Bye.